Hello and welcome out to the Market Insights. And feels like for the first time in a few weeks, I'm actually on schedule with this one. We're going to do the market update here, and I'm trying to make a light of it and just joke around. But anyway, I may have used this quote a while ago, but I love it. It just hit me today just right. If an egg is broken by an outside force, life ends. If an egg is broken by an inside force, then life begins. Great things happen from the inside. And if you've been trading for a while, then you know what this means. Basically, trading is 95% mental, and it takes a lot of courage to step back and look and see what it is that you're doing incorrectly or mistakes that you've made and be open and honest with yourself. It takes a lot to look in the mirror. The vast majority of people are not capable of it. They do not want to see the reality of it. They don't want to accept reality. They want to continue to live in this fantasy land. But what's up with that? um, I lost my train of thought, but anyway, I think you get it. It's important to be introspective and look at ourselves, not just look at ourselves, but honestly, and make sure that we're not deluding ourselves. So, with that, let's get right to it. See, today's 23rd. Wage inflation. Oh, this data all came out. PPI year over year. I can't even remember what the PPI is. I studied this stuff years ago and can't remember. Don't care. It doesn't affect the market really, at least not in a big way. Um, Wage inflation. 30-year auction bond. I have never looked at the actual and the prior. See what they are. Mortgage rate 394, 393. Purchase index. I don't know if it really matters, but they're all about the same. Mortgage refi index. Don't even know what these are. Bubba President Weedman speaks. I don't know what Bubba is. FMC Board Bullier speaks. Oh, here's no new home sales. Affects obviously the housing sector, or at least it can. Um, Last year, 512,000. Consensus was 510,000. It came in at 494. Ooh, interesting. So in other words, the consensus, or wait, what was the wait? Actual, okay, actual consensus and prior. I got to get these straight. I wish that head would roll down with it, but um, what is it again? Actual consensus and prior. So actual was 512,000. Consensus was 510. Oh, it's the opposite. And prior was 494. So in other words, housing starts have actually picked up. I think this is a monthly deal. Oh wait, no, there's month over month. Oh, new home sales. Yeah, that's right, month over month. This is that year over year? Must be year over year. It doesn't say that. It usually says year over year. It must be for the month of February. Yeah, that's what it is. It's monthly. So in other words, last year in February did 494,000 housing starts. The expectation this year was 510, so an increase, and it was actually higher than that. So that's a good thing actually for the housing sector. Well, I don't know if I should say good thing, but it is a thing. Don't know what the market's going to react. Typically, you would think this would be a good thing, that the consensus, in other words, housing starts have gone up. The expectation was for them to go up a decent amount, and they actually went up more than that. So typically, when the actual number is better than the consensus, better than the expectation, typically things go up. It's bullish. There's crude. Wait a minute. 3 million, 9 million. What's up with that? Okay, that's just crazy. I don't know what this is. Consensus and actual consensus prior. So actual crude consensus. Actual crude was 9 million. Consensus was 3 million, and last year was 1.3 million. I'm not sure. I don't even know how to read that. Why wasting time on this? See, this is why I don't look at this stuff. This is really a lot of this economic data is for those that are trading futures with that specific deal. It really doesn't affect the overall market that much. That's why I only look for big stuff. So, and what we just did, there's core retail sales, not a huge effect. Retail sales, I mean, that's may affect the retail sector, so we got to be aware of that. But now we got GBR and ITA. I don't even know what all this stuff is. Most of it's just a bunch of bunk. National gas storage. It's too much. That means GDP. GDP quarter over quarter could be. This is France though. FRA. Is that France? It is. That's GDP for France. There's a USA now. So now we're getting other countries coming, and this is just insanity. It's too much. Too much to deal with. Too much stuff. I don't like it. Unemployment rate. That's 328. Why is it coming out the 28th? This is weird. Last month it came out the 16th or something, didn't it? Oh, that's Japan. That's why. I wondered what that was last week, and I meant to go look it up. I never did. I just noticed unemployment rate for Japan. Really? Oh, man. Now I really don't want to look at the news. There's just too much. Look at this. That's like a week and a half, 2 weeks worth. There's unemployment rate again. Oh, Canadian unemployment rate. Who cares? Anyway, all right, let's get to the chart now. Wow, that was stunning. I didn't even see all that stuff. SPX, a decent little sell-off today. Tiny little increase in volume relative to the last couple days. And then we've got, for to this day right here. Not a very big day up day. We had big volume. Every other day has been, notice the volume, the moving average line has been dropping. The volume has been getting lighter and lighter and lighter, which is, and we've said this for the last 2 or 3 weeks, it is not a bullish sign. It is a bearish sign. Even though the market's going higher, the volume getting lower means less and less people are excited about it. If people were excited and bullish about this market, the volume would be increasing. People would be pouring more and more money into it, but they're not. So, technically speaking, we are still, we're still in a downtrend longer term. If we go back and look, you can see longer term we're in a downtrend. Let's see, I don't know if it's a long term, but about a year, not quite a year. We got lower highs, lower lows. Very easily could be the beginning of a downtrend. You can see all the chop we had here from late 14 up to late 15, mid August of 15, and then the first little crash, and then a bounce back, and a little dance around, then a big crash, and a dance around, and bounce. So this is very reminiscent of a top. This is what happens. In fact, if we go back, you see 07. 2000's a little more accurate. We've got rally. We dropped off there at 98, huge. And then funny is August. And then it kind of danced around there for a while. It peaked out around 1500, danced around, then finally broke down a little bit, then fell real quick, and then rallied back up, and then boom, crash. 2007 was similar, where we had the rally up to the top, and then it went sideways for several months, almost a year, and then it broke down. Head and shoulders played out, boom. So you look at what we've got now. I think it's even more dramatic, quite frankly. It has taken longer to reverse. It has topped out even more. I think it's just a more, I don't know if I should say I can't really say it's a better reversal. It's just different. It's taken a lot of time. And all we've had here, you go back to the crash of, what was that, October 14. You go up even the peak there at 2000. It peaked out at 2000 the first time was in September of 14. So a year and a half ago. So in a year and a half, it's gone from 2000 to 2100 essentially. That's only 5% in a year and a half it's gone up. If you look at from where it was at that point from the peak of that point to the peak of the last 2 years is only 5%. That's nothing. In other words, the market hasn't been increasing. It went last year. If we go from 13, let's see, we go 12. Let's go 11. 12, let's go to the end of 12, which is approximately there. Okay, 1430 to the end of 13. That's 400 points. 400 points in a year is how much? 400 divided by, what was it, 1,300? 1,400. Whoa. 400 divided by 1,400. 28%. That's a 28% rise in a year. Now, granted, that was one of the better years, but still, even a 10 or 12% rise in a year is pretty decent. It's kind of average. But 28, and you've kind of had that. You had, there's December December of 11, we're at 12.15. $12.15, $14.50. That's at about 200 points. Still, it's about 20%, and then 20%, another 20%, and now in the last year and a half, we've only got up 5. Something's happening, and it looks like a reversal coming. So, and we've talked about it over and over and over again here. And the weak volume is definitely a sign. So the question is, what happens from here? I think we get possibly a big day or two drop. We'll probably bounce at 2,000, maybe a little recovery there. And then from there, it's hard to say, but that's what I would expect. I expect it to drop back off to 2,000, dance around it a little bit. Maybe it'll hold that as a support and rally from there. It's possible. If it doesn't, if it cracks right through it, this rally's over. You can see indicators are starting to get weak. MACD is starting to roll over. Stokes has been riding that 80% line, which it does. You can see back here it did it. And then it sold off a little bit and it went. And this is kind of what I would expect. You can see it's a very similar rally to what we had back here. September, it rallied for 6 or 7 weeks and then boom, sold off real quick, went sideways. It really went sideways before it dropped off pretty heavy. So we'll see. I'm going to guess the other markets probably look the same. NASDAQ dropped off heavy today, actually, surprisingly. Not surprisingly, but I mean, it looks heavier than the rest of the markets. Industrials look the same. Transports, basically the same thing. And Russell, increase in volume, a little Maribozu. Go look back at this real quick. Yeah, the volume's dropping off on the transports. Russell, Maribozu, 21 points down, and average volume, a lot more than the last few days. So that says something. The VIX, little tiny bit up, but nothing huge. So it's kind of I think we're kind of starting the calm before the storm, possibly. It could be several weeks, though. That's the hard part, is you don't know when the storm's really coming. You might see it on the radar, and it's maybe getting closer. But knowing exactly when it's going to hit is the hard part. You don't know exactly when it's going to hit landfall, when it's actually going to happen. So we've got to be prepared and be ready to move out and jump on it and do what is needed when it does show up. So we will see. We will see. So just stay prepared, stay cautious, and have fun. Y'all have a great night. We'll see you soon. Bye-bye.